Here we go. We got price line. We got a price line May 12th. Look at that. And what is this? It's called a weekly. Expires. The power, the technique, the wholesale entry, then the exits to get paid. That is everything you want to be. And I'm here to do that just for you. That's called making a market. Once again, it's a weekly contract. It takes a very high skill level system, such as the systems that the market makers use. And what we look at is how the call side is starting out in about 19 minutes from now at 6:11 a.m. Pacific Standard Time, 5/21 of 2012 with the gap up in the futures. But guess what? Equities gapped up higher, everybody. But you know what the futures did? They were up around 75 handles. They pulled back. That means that stocks intraday, when they hit their resistance levels, they too will pull back. So you'll be shorting that higher end entry and buying back at the lower end at a wholesale price to cover and go long immediately within the directional price movements that the SMF Trading Platform system will verify beyond a reasonable doubt. Because if it doesn't, then you don't belong in a trade. So we're going to have a trading range based on price deflation. And I'm going to put a whopping bid out there. And here's the close. And it's a weekly. And here's the close. It's already been marked down $10 to me. To a lower market maker level. And it's a 630. Now, here's the weekly price line chart down here on that 20-week moving average. And if you undercut that 20-week moving average, you could go down 3/8 to half delta, oh yes, and stop there, and then turn, and then engage with entry and take that range to that higher resistance level. You have a gap up, but gaps have been diminishing. That means that equities are going to go up. But if you sell below this 20-week moving average right here, that's this red line, that is where stock market orders will get triggered. That would push it down into that negative 3/8 and a half. What you're looking for is that the low of that ratio reading in your platform stays there. Once you make the transaction, it can test the same common denominator or ratio common denominator number in the platform. But if it doesn't go lower, that means you start accumulating for the breakout and take that price action movement. Now, back to this price line weekly 620 call. I'm going to steal a bid, man. So here's what I want you to do. Stock closes at 632. Once again, there's a gap sequence. Whoopie ding, 391 shares. So, understanding the manipulation in the options market, because I'm a market maker, and what am I here to do? Let you get on board with that system that we use, because what's it going to do? It's going to help you get over on the people that created the high frequency in the buy and sell tape, because that's exactly what we're going to do. So I'm going to bid this call right now based on, yes, this is gapping up. So that means that this 630 call is supposed to go up in value. The last print's 1490. There was only 12 volume. The close at 2490. Look at the range. It was $6.50. So even though that the equity is gapping up a couple of dollars, and if I don't break, if I hold the gap, meaning that if I get a 3 teeny gap on the opening bell on price line, it goes up and comes back and holds that area and doesn't want to break lower, I got to get net long. So I'm going to bid this contract right here, right now, on the opening bell at $9.60. $14.90 was the close, a markdown of $24.90. MMT, get on board with me. Put those limit orders out there. The time is 6:15 a.m. Pacific Standard Time, 5/21/2012. And for the new people that are going to buy your $3,000 seat or your $5,000 seat or your $10,000 monthly seat, you too will be here, and your responsibilities are as follow. I give the price, they go, and you're not in that trade, that's on you. The volume amount of contracts are going to be based on those certain price levels, $3, $5, and $10,000 seats. Just like you buy a seat on the NYSE, or you buy a seat on the CBOE, or PHS, or whatever exchange. Well, we have our own exchange. And if you want to get on board with this exchange, then get here now, because it's better than the one you're on now. Doesn't matter what level you are, the very highest level or the very lowest level. Come get it on with us. You'll see the difference. Pre-market, I'm still in the bid at 960 on the 530 call. That's based on the gap up now. So when you gap up, these aren't supposed to go lower. So we're going to see if the market maker steals the premium. If the market maker steals the premium on the floor, your limit order is there to beat them at their own game. And yeah, you, as a retail trader, get a chance to take it away from them. Take away that entry order. Steal that price for the high frequency robots. They work both ways. They work on the gap up and they work on the gap down in price. And that's the part you want, because you want to beat the people at their own game. The people that create the price volatility. We're experts in that. So for the people that have those rooms, suit up, show up, pay up, and then there'll be different volume. So the people in the $10,000 a month room, your minimum load is 100 contracts to 500 contracts. And your profit objectives in that room is 100,000 a week. I don't have any more to say right now other than put that bid out there. We'll start working the market. It's day one of a weekly. The monthly expiration just passed us by. And today's date, 5/21/2012. I got 12 minutes to the opening bell. And what we're going to look for now, just remember one thing. Once you are at the major 20-week moving average, that's that red line, it's sitting right on it. He already undercut it right to where we're at now. So what we're going to be looking at is where that electronic frequency change, like it's doing down here in that wick, and then it goes up. It doesn't matter, it's still doing that. So you're always looking, where is that lower low going to hold, and you draw trend lines down here, and you take a look at 629 or, a little bit lower. So the thing about it is, it's that bottom up. It's that entry here. Beating the high frequency machines, beat them at their entry with using the SMF market maker system, order routing system. Get involved today.